What is up guys, Taiki here, and in this video I'll be discussing the recent news surrounding the Bitcoin ETF and how a rise in Bitcoin dominance may affect your portfolio and yield farms in general. So if you like the content, please like and subscribe, leave a comment in the comment section below. So let's get started. Okay, so obviously there's been a lot of news surrounding the Bitcoin ETF. 2 weeks ago we had this Bloomberg Intelligence terminals essentially say there's a 75% chance that a Bitcoin ETF will get approved. And this morning we had this Bitcoin Strategy ETF, this ticker BITO. It's 95 basis points, less than half of GBTC's 2% fee, apparently going live next week, either Monday or Tuesday. It was also reported by CNBC. So, it sounds like all signs point to this thing being approved. And though nothing is official, because everyone's saying this Bitcoin ETF is approved because of this document about like how the Nasdaq is approving this ETF to be listed, but there's no official word from the SEC about approval or denial, right? However, also this was also posted yesterday on the 14th that the Bitcoin futures ETF is not going to face SEC opposition at the deadline. So though it's not official, it kind of feels like it's official, and the market is also pricing it in because in this type of market, Bitcoin is up almost 8% and altcoins are just not doing that well, right? And I'm sure if you got into crypto in 2021, you kind of feel like Bitcoin is like a boomer coin that doesn't do anything. But you have to understand that when Bitcoin dominance takes over, Bitcoin just sucks up all the liquidity from the altcoins, right? And I guess like as a person that lived through Q4 of 2020, I can tell you that when Bitcoin is sucking up all the liquidity, you don't want to be like holding majority altcoins, because when Bitcoin dominance goes up, like altcoins just get wrecked, right? It's going to underperform to the upside and it's going to underperform to the downside. So on days when Bitcoin is up, let's say 8%, altcoins may be up 2%, some are down 2%. But when Bitcoin goes down 5%, your altcoins are going to go down 10%, right? Generally. Sure, you're going to find like one of altcoins that will outperform Bitcoin, but just like, the majority of altcoins will underperform. And if you haven't lived this environment before, then you have to be prepared, right? You have to understand that this is possible, and it feels like it's starting to happen. Because in Q4 of 2020, Bitcoin essentially 3x'd, right? It went from like 10,000 to 30,000, and then in the first week of January, it went to like 40,000. So you might argue that, hey, it kind of 4x'd in Q4, while altcoins were just down or sideways, and ETH, right, didn't even 2x. So this is like what happens when Bitcoin dominance takes over. So, I classify Bitcoin dominance season as a farmer, right? As a farmer, to be comfy season, where we can just hold Bitcoin as collateral, borrow dollars against it, and farm with those dollars. And as Bitcoin goes up, we can just see our collateral value go up, and we're just like feeling super comfortable. And because Bitcoin is like the least volatile crypto asset, we can be more, I guess, more aggressive with our health factors and liquidation LTV ratios and whatnot. And I'll kind of go over like how to do the math on that later. But this is kind of how I'm feeling about the markets, and it's one of the reasons why I hold like a majority of Bitcoin in my portfolio. It's over 50% by now. So if you're holding altcoins and if you've been like like kind of feel like you're not going to be happy about this, you should know that like I feel like people should prefer this, right? Because if Bitcoin takes over and we see like a carbon copy of 2020, like Q4, we're gonna have like a healthy market led by the majors, right? Where we have Q4 Bitcoin season, Q1 ETH leads, and then all those profits trickle down into the altcoins in Q1 of 2022. And if we do a repeat, maybe alt season restarts in Q1 of 2022. After people take profits onto Bitcoin, profits from Bitcoin into altcoins in the new calendar year to delay their taxes. Because even though I didn't really notice at the time, like in January of this year, like we just like literally saw this happen, where in Q4, just Bitcoin, just green candles everywhere, everyone like not holding Bitcoin was coping, and Bitcoin maxis were euphoric, right? But for ETH, right, in Q4 it didn't really do anything, but on January 1st. Let me know if you guys were in like ETH at the time. I literally woke up and my ETH was up 30%, and I was like, what is going on? And in hindsight, it's probably people that made a bunch of money on Bitcoin, rotating their Bitcoin into ETH, on January 1st, so they can pay taxes in 2022. And I'm sure the same will happen, and I'm sure I'll do this too if Bitcoin just goes on a crazy run, where if Bitcoin goes on a crazy run, like I'm not gonna sell my Bitcoin in December. Like I'd rather just delay it into like January or like February so I can pay my taxes in 2023, right? Sure, people can front run this. yada yada yada, but that's generally what might happen, right? I'm just going over like what happened before, and if Q4 is Bitcoin season, like this might happen again. So that being said, if we are in Bitcoin season, Bitcoin dominance season, like how do we farm, right? How do we farm? Because this is a farming channel, right? I'm not gonna like no one's like watching this, watching my videos to like talk about like, oh, like Bitcoin's bullish, right? That's not the point of this channel. So let me just go over a few ways they can farm with Bitcoin, right? It's the simple ways that you can get started on, and then I'll end on like my farming mindset to get deeper into the weeds of like how I think about farming when Bitcoin takes over. So let's go over Curve and then incentivized money markets. So what is Curve? Curve is a decentralized exchange. It's an AMM that's essentially designed to swap between like assets, right? So from USDC to Tether, DAI to USDT. It's really good at swapping between like assets. But Curve recently came out with this new product called atricrypto, and this is available on Avalanche. It's also available on Phantom. They're both paying roughly 28, like 30% ish. Pretty good yields, and you can essentially deposit Bitcoin or ETH and earn these rewards, which is pretty impressive. So I'm not gonna spend too much time on like how this actually works, but I'll just like quickly go over like a broad scale, like what's actually going on behind the scenes. So when you deposit assets into atricrypto, right, you can deposit any asset, stablecoins, Bitcoin, or ETH. You're essentially being a liquidity provider, right? You're being an LP that's essentially helping facilitate all the swaps, of people that like use Curve to like swap between Bitcoin and ETH or whatever. And you're essentially depositing 33% Bitcoin, 33% ETH, and 33% stablecoins, right? It's 3 assets. Same ratio, you're just depositing it, and in return, with the Avalanche Trust rewards, with the Phantom rewards, you're just going to get more coins in return. So you are exposed to impermanent loss, right? So you should take that into account. So I just did the math for you. So let's say hypothetically, I don't think it's going to happen, right? Because like Bitcoin used to be 10K, now it's like 60K. So like it's going to be really hard for it to triple. But let's say we see a carbon copy of Q4 of 2020, where Bitcoin essentially triples and ETH goes up roughly 75%, right? If this happens, like what is the impermanent loss you will incur? Well, the impermanent loss is 9.39%. So what does this actually mean? So, if you deposit $10,000 of Bitcoin into atricrypto, and if you just held it, right, if you didn't do anything, you would have $30,000, right? Because Bitcoin tripled. However, if you deposit it into this atricrypto pool, because of the 9.39% impermanent loss, you would pull out $27,483 worth of Bitcoin, plus whatever rewards you earn. So you are exposed to impermanent loss, which is the downside of the atricrypto pool. But generally, impermanent loss isn't a huge deal when it comes to these things. Like usually, like in most scenarios, like the rewards will make up for it. Because maybe this is like the more likely scenario in Q4 and Q1, where Bitcoin goes up 50% from there, and then ETH goes up 75%, right? In this case, the impermanent loss is 2.65%. And because Bitcoin and ETH are highly correlated, there isn't going to be too much impermanent loss risk. And also Bitcoin and ETH, there's such high market cap projects, and it's unlikely to see them like go up 3-4x in a span of a couple of months. So yeah, you are exposed to impermanent loss risk, but generally it's a great place to park ETH or Bitcoin. I know a lot of whales. I know a lot of people that just have their essentially Bitcoin and ETH stack. They just put it on here. They think of it as a savings account because you're not really exposed to impermanent loss, but you're also receiving AVAX rewards, Phantom rewards, Curve rewards. I believe Curve rewards are coming to Avalanche soon. I don't know when, but that's something to keep in mind as well. But what if Bitcoin and ETH goes down? Like, let's say, what if Bitcoin goes down 20% and ETH also corrects 30%? Well, in this case, the impermanent loss is 1.1%, right? So generally, it doesn't really matter. The impermanent loss risk is pretty low, but just understand that you are exposed to it. Okay, so now what if you don't want to be exposed to impermanent loss, right? Because you're super bullish Bitcoin, super bullish ETH, or or you don't even have to or you just don't want to think about it, right? So I think this Bitcoin dominance season, it kind of coincides well, right? The timing. because it lines up with the incentivized money markets from Avalanche and Phantom. From Avalanche, we have Avalanche Rush, where money markets like AAVE, Benki, and Trader Joe, they're going to be receiving rewards. And on Phantom, we have a money market called Geist, who's receiving super high inflationary rewards, which you could be interested in, right? So let's just go over AAVE and Geist in more detail, just so I can just simplify things a little bit more. And I kind of tweeted this out last week, where it might be Bitcoin maxi season, where you just use Bitcoin as collateral, earn interest on it, right? Just lending out your Bitcoin, and then you can get paid to borrow stablecoins, right? Due to these liquidity mining programs. And then with those stablecoins, you can farm or play around with it. And as long as you're not being too risky, as long as you're well aware of what you're doing, right? It can just be a great way to earn yield on your Bitcoin and gain exposure to other altcoins that you could farm for free with dollars. And the benefit of holding the majors like Bitcoin or ETH is that you can use it as collateral on essentially any chain that has a money market. I've heard people call Bitcoin pristine collateral, and it's one of the reasons Bitcoin and ETH has additional utility in DeFi, because you can bridge Bitcoin on any chain as long as there's a money market, place it in a money market, borrow dollars, and with those dollars you can earn 20, 30, 40% APY, right? Even if the money markets are not incentivized, right? Hypothetically, let's say you're paying 4% interest to borrow USDC. Well, if you're placing that USDC on Curve and earning 25%, technically you're borrowing X dollars and you're earning 21%, right? Because you're paying 4%, but you're earning 25%. So as long as you're, being relatively safe with the health factor and the loan to value ratio, this is a great way to earn interest on your Bitcoin indirectly. Also, I really like collateralizable assets, right? So Avalanche and Phantom also have utility in each money market, just because you can use it as collateral in case you want to hedge against the potential that we are still in L1 or alt season, even though over time it seems less and less likely. So let's just first dive into AAVE, right? On Avalanche, where right now you can earn roughly 5% to lend your Bitcoin, right? Right now you're not being paid to borrow, right? You can be paid to borrow Tether, but I'm just going to focus on USDC because people like USDC. But right now you're essentially getting a free loan on USDC on AAVE, because you're paying 3.3%, but you're earning 3% in Avalanche Rush rewards. And I'm just going to touch on Trader Joe as well, because right now you're not being paid to borrow. However, Avalanche rewards are coming, right? Right now the rewards APR, right? So on the left we see the deposit APY and the rewards APR, borrow APY, rewards APR. They haven't received Avalanche rewards yet. $10 million in Avalanche rewards are coming. I don't know when, right? I don't really know the timing of these things, but maybe when these rewards come, this could be a good place to park your capital, right? Obviously, it's going to get diluted as more and more people bridge, more people borrow and lend. But just these incentivized money markets are super powerful in this way. And on Geist, this is on Phantom, right? It has roughly $7 billion locked. And, on Bitcoin, you can earn 3.5%. You can, be paid 4% to borrow, essentially. Like a quick disclaimer, these APRs aren't real, I guess, in the sense that, if you want your tokens immediately, you kind of have to burn 50% of it, right? So let's say I earn $100 in Geist tokens. If I want that immediately, I kind of have to, slash $50, right? And then I'll get the other $50. But if I want to get the whole amount, I have to wait 3 months. So, just quick disclaimer. I'm not really doing much with it. I'll show my position later. I'm just letting my guys sit. I couldn't be bothered to figure out what's the best way to deal with $100 of the Geist tokens right now. But it's an incentivized money market, and they also have Phantom rewards, just a little bit. So that being said, all right, so we have money markets, on AAVE. We have 3 money markets on AAVE, and we have 1 on Phantom. But what do we farm, right? So my thinking is that, my bias is that we're in Bitcoin dominance season, and Bitcoin will outperform most altcoins. Then in that case, it kind of makes sense to start farming altcoins to accumulate, and for altcoins that I want exposure to. I'm not necessarily farming these altcoins hoping that they 10x tomorrow or next week or next month. I'm just farming this because I'm bullish on the fundamentals, I'm bullish on the project, and maybe in Q1 of next year, maybe Q2 of next year, these altcoins catch a bid, and it's hey, I've been farming this for a couple months, they double 3x or whatever, and I'm super happy, right? So I'm kind of positioning myself for future, right? 2022 or whatnot, and looking into altcoins that I can accumulate with my dollars. So one example of a project I'm bullish on that I'm farming is Abracadabra Spell. I kind of touched on it a couple times in my past videos, but it's gone up like 20, 30x. The chart looks insane. It's vertical. I'm bullish on the project. I think it deserves its high valuation. But me personally, I don't want to buy this after it's gone up so much. But because I am super bullish on the project, I'm just gonna just take my Bitcoin, put it as collateral, borrow against it, be paid to do so, and then farm this for free on Phantom. So this is like the setup I have now. I took the screenshot like a couple days ago, but I have essentially on Geist, I have Bitcoin as collateral, some Phantom, borrowing dollars against it, putting it here, and right now I'm earning 30% on my spell. Where I'm earning 30% on my dollars, and the APY is 30% paid in spell. And in my mind, like I think, me personally, not financial advice, I think spell deserves a higher valuation, right? Let's say 12 months from now. So like I think of this APY as like a low APY, right? Because if the price of spell doubles tomorrow, then this APY becomes 60%, right? Because I'm being paid in this token. So this is a project I'm bullish on. I'm farming it with dollars, and as long as my health factor is safe, my loan to value is safe, hey, like I'm just farming to accumulate this project. So in the summary, if we expect altcoins to underperform, farm to accumulate may be a better strategy than looking to go into like degen farms, like farming to dump, because me personally, like I think of this as Comfy Szn, right? I feel comfortable with my Bitcoin stack, so I'm gonna ride my collateral up, and I'm gonna borrow dollars against it, and then farm assets I'm bullish on to prepare myself for a future alt season. And I feel like not everyone needs to hear this, but I feel like everyone needs to be mentally prepared that altcoins might get wrecked, right? Even today, like altcoins are getting wrecked relative to Bitcoin, right? So there's this meme of like up in USD, but like down in Bitcoin, where like Bitcoin's up 10%, but your altcoins are up 2%, right? Are you really happy? Not really, because you're taking on more risk to buy altcoins, and if they're just underperforming Bitcoin, then what the hell am I doing, right? So I'm not gonna go all in Bitcoin, right? Because I'm not gonna assume that I know everything. But I do have over half my portfolio in Bitcoin because I can use it as collateral on AAVE, right? I have some Bitcoin on AAVE, and I have some on Geist as well. And just looking into farmable altcoins to accumulate that I'm bullish on fundamentally. So this is my setup on Geist. I took this screenshot I think yesterday or 2 days ago. So the price of Bitcoin is a little higher now, but I have some Phantom as collateral, have some Bitcoin as collateral. I'm borrowing dollars against it, right? I'm being paid to do so. And my health factor is relatively safe. Yeah, so let's kind of touch on like what's like a safe health factor, right? I don't like to look at the health factor. It doesn't really mean anything. It kind of depends on like what your collateral is and how much your assets would have to go down in order for you to get liquidated. So because I'm borrowing dollars, right, the borrowed amount isn't going to fluctuate up and down. So I only have to focus on like, my collateral, right? So if you click on the details, let me just go here. If you click on the details tab here, right, and you can do the same for AAVE, you're going to get this pop up, which kind of looks up what is your loan to value ratio right now, what is the maximum LTV ratio, and what are your liquidation threshold. And this is the most important number, right? This essentially says that if the borrowed amount gets to 70% of my collateral, my position is susceptible to being liquidated. So, I have $42,300 borrowed. So this is simple math. You just divide it by 70.12%, right? Which is the liquidation threshold, which is $60,325. The value of my collateral is roughly $110,000. So essentially my collateral has to go down 40% overnight in order for me to get liquidated, right? And the key term is overnight, because if Bitcoin's down 20% tomorrow, like I'm not gonna just like watch my position like just about to get liquidated. I'm gonna pay back my loan, right? Because I have my dollars on Abracadabra, but like it takes like 3 clicks for me to get that USDC back and repay my loan. So obviously this depends. I'm not gonna like talk about like what's a safe health factor, right? You have to do the math yourself. If all your collateral is in Phantom, then yeah, maybe you should have a safer health factor. But if all your assets are in Bitcoin, then maybe you can be more aggressive with the health factor and whatnot. Okay, so in conclusion, it feels like it's about to be Comfy Szn, right? My Comfy Szn, I define it as just Bitcoin and ETH, the majors just outperform most altcoins, and we can borrow against it. And with those borrowed dollars, you can just farm, and just position yourselves accordingly, right? This is my bias, right? If you have a different bias, then just you do you, right? But understand the value of collateralizable assets. Assets that you can use as a collateral is just like generally more valuable to me. And the more you farm, you're going to understand the value of this. Because let's say you just own a bunch of altcoins. Let's say you're 100% altcoins, right? And you're just super fully exposed, right? But you're bullish everything, right? And you feel super happy about it. But what if there's an opportunity tomorrow, right? and it's like a new farm or a new project, and you think it's like a great buy. Well, if you're 100% altcoins, then you kind of have to sell assets that you're bullish on to like buy this new thing that you're bullish on, right? But if you hold Bitcoin and ETH, right, and you have like a safe health factor, you can borrow against that at any point. Obviously, you have to be safe with that. But it kind of, I guess, collateralizable assets. Think of it as like equity that you can unlock through money markets, and generally like whatever interest rate you're paying, it's going to be lower than like whatever that you're farming, right? Like for example, I'm paying, like even without the rewards, I'm paying 4% on Geist, but I'm earning 30% on Spell. So I'm willing to take that interest rate hit because those dollars are doing more for me, like through farming. And even Instagram ads, right? They're supporting my bias, right? I saw this ad. If you like how comfy it looks, you'll love how comfy it feels, right? And you can kind of replace this with Bitcoin, and that's kind of my sentiment on the market right now. Okay, and lastly, I want to wrap up the video by just raising an open-ended question for you, right? This is for you to answer, and ask yourself like, what are your goals in Q4, right? Because like what are your goals in Q4, and like how do you want your portfolio to look in Q1 of next year, right? And the goal is to work towards that, because I feel like when you're into crypto, when you're deep in the weeds, you kind of get lost every single day with like the price fluctuations. But if you take a step back, you kind of have like if you think about your portfolio and like where you want it to be and work towards that, then it might give you more clarity on what you want to do. So I'm just gonna share 5 of my goals in Q4 and like where I want my portfolio to be in Q1, and whatever I do for the rest of the quarter, I'm going to work towards that. So my goals, first of all, have a healthy Bitcoin and ETH stack. I'm working towards this. My Bitcoin stack is super healthy. It's a huge part of my portfolio, but my ETH stack is feeling very, very light, right? I'll be honest, because recently in Q2 and Q3, I've been playing these L1 rotation games, and they worked out well for me. However, I feel like I've kind of ignored ETH recently, so I purchased some ETH yesterday, and I do want to DCA into ETH over time, because like ETH isn't like not even like the second largest position in our portfolio, so I do want to raise my ETH stack, because if we see a carbon copy of last year, then maybe ETH has like a crazy pump in Q1 or something, right? So second, I want to increase my Terra ecosystem exposure. Even though I'm publicly super giga bullish Terra, right? I'm super giga bullish Terra. My bags in Terra is pretty light, right? So I do want to slowly DCA, some of my profits into Terra, into ETH, because I'm bullish and I want to increase my exposure. I also want to focus on yield bearing or revenue share assets, also collateralizable assets. I don't want to be holding like altcoins that just sit in my wallet. I'd rather have it, like at least like borrow against it or something, right? Have it be collateralizable, or I want it to be yield bearing in some way. Or if it's like a revenue share asset, I can stake it and earn fees from the protocol. Also identify farm to accumulate projects, right? Like right now I'm farming Abracadabra, but I want to find more projects that I can farm with stablecoins, because I just want to be in this mentality of Comfy Szn. Lastly, I want to always hold at least 10% in stablecoins, because not only does stablecoins protect you to the downside, you can earn like 20, 30, 40% on stablecoins easy in DeFi. And also, with the example I mentioned earlier, like if you're 100% invested into non-collateralizable assets, like what if a better opportunity comes, right? You're gonna have to sell like your coins to enter this new opportunity. But if you always hold stablecoins, that's gonna be like ammo that you can use at any point to enter new opportunities, or like to buy dips on like any project that you're bullish on. Okay, so that's the end of the video. Hopefully this gives better insight on like what could potentially happen during Bitcoin dominance season, right? Altcoins will most likely underperform relative to Bitcoin. And in this type of environment, me personally, right, I'm like looking to accumulate altcoins that I'm bullish on, for example, Spell. So thank you guys for watching. Hopefully, this helps. And if you want to know what I'm farming, check out the link to the private Discord. Link is in the description below. Thank you for watching, and have fun farming out there.